Hello there, you're watching the weekly edition of Your Trades on ET Now with me, Snehisha, and with me as always is Priyanka. Let's take a look at how the markets have panned out. And well, it's been a power-packed and action-packed week coming in for the markets. And let's quickly take a look at what the markets have done. And at 24,323 is where we've closed on the Nifty. And range bound, we've managed to cross 24,400, recede a little bit from those levels, but not much to worry about. Remember, over the course of the week, we've hit record highs on Nifty, Nifty Bank, you have Sensex, Nifty Mid Cap and Small Cap as well. So exuberance being seen in across the markets. Quickly taking you through what the sectoral moves have been like. Nifty IT biggest winner 4% higher. Nifty Pharma also 3.5% higher. Aided by stocks like Laurus Labs, Lupin, Glenmark. You have Nifty Energy also doing pretty well, 2% higher where that is close for the week. ONGC, Coal India, IOC, Power Grid. All of those stocks, you have PFC, REC, remember both of them have also surged. IT was also surging. You had the double upgrade on Wipro, and over the course of next week, you have IT earnings coming in from major IT bellwethers. And Nifty Metal doing pretty well, 1.5% higher. FMCG has closed in the green after quite some time, 1.5% higher over there. Realty is what saw real turbulence over the course of the week, but has closed 1.5% higher as well. Auto and bank also holding on to those gains. On the flip side, PSU banks have not done very well, and highly under pressure because of IOB, Maharashtra Bank and the other banks, and also on the back of some quarter 1 updates coming in, wherein Federal Bank has outperformed expectations and HDFC Bank is what has done drastically, horribly to rather put it, in the quarter 1 according to their updates, Priyanka.
All right, and that's what actually HDFC Bank, if you see the maximum, the highest volatility which we could see was in the banking index only, led by HDFC Bank on the both sides. 1,000 points of move we've seen on Bank Nifty on the entire week, both sides, plus also and minus also. Nevertheless, we are actually on the same kind of levels where we started the week on Nifty, but the two sectors which did exceptionally well in this, Snehi just briefed about it also, very briefly she spoke. Nifty IT index, which gains for the 7th day in a row. IT sector was on the move for whole week, and not just Indian IT stocks. In fact, globally IT stocks are also on the move. Double upgrade by CLSA on Wipro, which lifted the sentiment, and later Nomura also turned bullish on IT, and of course there was a bullish note by MOSL also. And now the optimistic comes on for the upcoming IT earnings also. Second space where we saw record quarterly earning updates coming in from this week was metal and mining. MOIL coming up with the highest record production ever. Hindustan Zinc is the first quarter mine. It's the highest quarterly update for Hindustan Zinc also, and for NLC India also. Third sector, which was a key sector, which was buzzing, power sector, power energy, power utility, power financiers, and therein also we saw a note by Bernstein. Bullish note on PFC, REC. They clearly mention about that investors are underestimating the duration and intensity of the power cycle. And that's what we saw the entire power space also buzzing. But then a lot of other stocks which were into action, defense stocks, especially Mascon like stocks, whose market cap crossed around about 1 lakh crore during this week. So that was also one of the stock which was in action. But now, to make more of the markets from here, now we are joined by two special guests, and this is a show where we talk about not just for this week, but we talk about the cues ahead also. Ajay Bagga joins in to talk about the macro environment, chairman of Elements Platforms, and he's a well-known market expert. And we have Rajesh Palve also to talk on the derivative and the technical front. Good afternoon. Welcome to both of you. Very quickly, I would like to understand first from Mr. Bagga. Mr. Bagga, today it's going to be a crucial day in terms of macro data also, because the US jobs report data is expected tonight. FOMC meet did show that policymakers are not in a favor of a rate cut. At least they did signal that US economy is on a disinflationary path. But what kind of macro cues are you gathering at this moment, which can be aligned for Indian markets also?
Yeah, overall, if you look at both the leading and the coincidental indicators of the US economy, there is a slowdown coming in. Overall, if you look at the labor market, it has become more soft. The second thing is the job creation is slowing down. To some extent, the wage growth is slowing down. Both the ISM numbers, manufacturing as well as services came in the contraction zone. So overall, if you see, it's a soft landing economy, which is what the Fed wanted. Powell's latest statement in the ECB seminar was that we can afford to wait. We understand the issue with a restrictive policy, but given the strength of the US economy, we can afford to wait. Now, the market is factoring in one rate cut in September. It's about a 70-75% probability of that, and one rate cut in December. But the Fed speakers and the Fed voting members are very clear that we have to see a lot of data for multiple months before we go down that route. So let's see who's right, whether it's the market or the Fed. But right now, Priyanka, there's a factoring in of one rate cut by September. The second thing will be Trump is mostly winning the elections, irrespective of whoever the Democrats put up against him. The momentum seems to have shifted to Trump. So the Trump trade has started in the world. One is Japanese equities tend to do very well. 2016, within the first few months, the Japanese index was up 30%. When Trump's anti-China tariffs come in, the Chinese market starts reacting. So it's going to see outflows from China, inflows into Japan, and also there will be some amount of tax cuts. The debt will go up. Immigration will be tightened. So labor supply will become even more tighter. That's why the US yields went up after the Biden-Powell debate, that more or less it looks like Trump is winning. And if that is the case, then borrowing costs goes up and taxes go down and debt levels go up. I think the Trump trade will be very exciting for the markets now, and we'll have to position accordingly.
All right, Mr. Bagga, thanks for that view coming in. Rajesh, I'm going to come to you now. I want to talk about the bank Nifty in particular, because even on the days when Nifty was gaining, you've seen Nifty Bank come under a little bit of pressure. And this is on the back of the quarter one updates being seen that we have, that have come down recently. Federal has done exceedingly well. HDFC Bank on the flip side has disappointed. PSU banks are riding really high on that cash deposit ratio. So tell us what levels, first of all, you're watching out for Nifty Bank going ahead, and also give us a sense of what we can expect from when these numbers finally come out for quarter one, and how you would prefer to play this sector. Would it be private versus PSUs, or are you going to be stock selective in both of those sectors?
So Isni, Bank Nifty was muted for the week. Almost we have ended around 52,500. But looking at the data setup, 52,000 has attracted more put writing. So that is likely to act as a good support area in the decline. So 52,000 would be the immediate and important support area on the downside. On the higher side, 53,000 would act as a supply zone at this moment. Major call concentration placed at around those strike. So I think if it crosses 53,000, then we may attract a short covering action in market, and then we could see further higher level. Overall structure is still bullish for Bank Nifty. If we talk about the Bank Nifty, the major dragger was HDFC Bank. Though most of the private banks have done well in last couple of days, stock like ICICI Bank, Kotak Bank, Axis Bank, and other banks have also participated in this rally. Even some of the bank like Federal Bank has also contributed to this up move. So most of the private banks are still holding the ground at higher level. Some cool off effect from higher level has been witnessed in today's session, but still we believe that the way most of the private bank except HDFC Bank are holding the ground, we believe that there would be again resumption of uptrend we can see in going forward. Some of the PSU banks have also shown good accumulation activity, and from that space, I think SBI, PNB, these two banks are looking promising at this moment, and I think here also we can see buying interest going forward. So from private bank, we like ICICI Bank and Kotak Bank. These two banks are looking attractive. And from PSU Bank, SBI and PNB, these two banks can be looked at for long side of trade. And we believe that again there would be a rally in Bank Nifty. So 52,000 should be your stop loss to hold your long position in Bank Nifty also.
Okay, quite many stocks from banking space on your radar then, Rajesh. Gentlemen, both of you stay with us. We'll stay for a short break here. More to come on the other side of the break. Mr. Ajay Bagga and Mr. Palvia both are with us. Welcome back. You're watching the weekly edition of Your Trades. We have Rajesh and Mr. Bagga with us. Mr. Bagga, also give us a sense on now run up to the budget. Since we've seen the budget's specific sectors have moved quite much. Talking about infrastructure, defense, these spaces have moved a lot also past week also. But then there was an interesting note by Jefferies which came in last week, and they've spoken clearly about that it will be a positive for government will be able to balance between the fiscal and the capex and growth, since they have a they have a sizable amount of dividend which they got in from government, and of course a tax buoyancy. What do you say? What do you have to make out of this space right now? Will these spaces continue to perform well? What should be the expectation in run up to the budget from here?
Priyanka, the only thing on this, and we had discussed this earlier also, railways and defense stocks, is the valuation. And I have been proved spectacularly wrong on this because they have kept going up even after being 50 times, 80 times price to earnings. Just the sheer momentum of the money coming in. If you see, there were block deals of 400, 800 crores yesterday in some of the defense stocks. So there are people who are allocating money at 58 times, 87 times price to earnings. Doesn't make fundamental sense. It's more the promise and all the next 3 years, 5 years execution has got baked into these stocks. So I think we get a melt up continuing in these stocks going into the budget. And then maybe post the budget, we see some softening. But overall, the issue is these are very good companies, well-run companies, huge order books, executing well, multiple year runways. Only issue is the valuation. So from a valuation perspective, we have reduced our exposure to defense and railways, even though they are growth stocks. I think we are looking elsewhere right now. Power for one is looking quite good. Again, you mentioned some of the brokerage reports on power. I think utilities, financials, they offer much more compelling investment thesis. Defense railways, you have to participate because it's very central to the India story. A lot of import substitution will happen, and then export growth will happen as well. We saw one of the foreign companies building locomotives in India, sending the Australian metro entire train is being built in India and sent abroad. Those things will start coming in also, but we have factored in a lot of it. If the valuations were better, it would be a no-brainer. The valuations make me a little cautious on the railway and defense.
Slightly cautious on railway and defense is the view coming in from Mr. Bagga. But Rajesh, I want to come back to you. And while Mr. Bagga is slightly cautious coming in on both of these sectors, I want to understand your view with the market going ahead, because the kind of bull run we have seen. Remember, 1 month ago, we saw an 8% cut coming in on the Nifty on the back of that election outcome. And from there, see where we are today, 80,000 on the Sensex. So do you think this kind of bull run that we're seeing, or this rally we're seeing, is sustainable? Are you penciling in a time correction coming in for the markets, and if so, how much do you see the indices correcting by?
So broadly, what is happening in market is the two factor which is driving the market. One is sentiment. Sentiment is on the extremely bullish side, and second is liquidity flows is also from the domestic front is keep on coming. So there is no as such pause on the flow side. So I think these two major factors which are are driving the market at this moment. Though we have run up so sharply in last couple of weeks, but still the way the broader market, mid cap, small cap space is attracting the buying interest, and the themes where there are some expectation towards the budget as well as for the long term reform related expectations, where we are seeing continuous buying flow is happening in the market. So we believe that still till the 24,000 is intact on the Nifty, I think there won't be any, kind of, cautious stance at this moment. I think trend may likely to remain on the bullish side. So I think 24,000 should be the important support area if we talk about on the technical front for the Nifty. So until we don't break those level, I think buy on dip should be your strategy. And I think the way global market is also, supporting. So I think across the board, we are seeing, good traction in terms of buying, and this really can extend further. And I think there is no as such signal at this moment where, we feel that, some reversal we may see in the near term basis.
Specific now, since we start with earnings very soon now from IT, and IT pack has started moving from last week only. 7th day in the row that IT has started moving. What are the expectation building up? A lot of brokerage notes which are talking about that optimistic notes on the upcoming IT also. What do you see on the charts right now? What are the trades? Are you recommending trades in IT spaces before the earnings starts?
This is for me?
Yeah, Rajesh. Yes, this is for you.
Yeah, some of the IT stocks are looking very promising. The way IT space has moved up in current week, almost 4.5% kind of gain, which we are seeing in the most of the IT index. So I think we believe that some of the stocks like Infosys, TCS from the large cap space are holding the ground at high level, and we may see some more upside in Infosys also at this moment. 1680 to 1700 would be the next target for Infosys, as the stock is comfortably holding above 1600 mark, and long built up is there in last couple of days. So we believe that Infosys could be a one stock where one can focus. Some of the mid cap IT stocks are also looking promising. Emphasis from the mid cap IT is looking very strong, and Coforge. These two stocks can be looked at from mid cap IT space. The way Emphasis managed to give breakout of almost last 3 month consolidation range. So there could be a possibility that we may see a continuation of up move. 2750 to 2800 could be the next target. Your stop loss should be placed at around 2580, and Coforge is also looking bullish. Here also we got a breakout, and looking at the derivative data also, there is a long built up on Coforge. So here we can see a target towards 6,000 for Coforge. Your stop loss should be placed at around 5790.
Thanks for that view coming in, Rajesh. Mr. Bagga, I'm going to quickly come for you, and we're going to try and cram in one more question. Now, I want to get your views on the way sectors have performed over the course of the week. You're seeing IT and pharma being the biggest gainers, and you have FMCG and the others have also done pretty well, but not as much as IT and pharma. Do you think now is the time where defensives are coming back into play and the cyclicals are going to take a back seat?
See, overall, what we must keep in mind at all-time high markets, what happens is when companies perform as per expectations, you don't get too much of a price spike. But if there is even a flattish or slight disappointment, you will see very sharp falls, like what we saw with the leading private sector bank today, with a flattish kind of numbers, no growth in the quarter. And you saw a sharp sell-off of 4%. So that's where we are at. And fund managers have allocated money out of financials into IT pharma on a defensive basis. IT, I think, has bottomed out. If you see the couple of commentaries that we got from managements, one of the big IT companies was talking of 225 AI playbooks being ready, 2.5 lakh employees being trained on generative AI already. As I mentioned earlier, you have the semiconductor guys, the enablers, and you have the end users. In the middle is sitting Indian IT, which will help to convert those enablers to give a cost advantage and productivity advantage to the end users. I think that time is coming over the next 6 months, 1 year. We will see case studies coming through. So good time to get into IT. Pharma has performed in the last 1 year. I think again, it's going to go up better. Only issue for us is not managing the US FDA audits well enough. And those repeat observations, I think really are heartbreaking at times. Otherwise, these companies would do even much more better. So if they could spend money for those eGMPs and to get compliance people in, I think you could see a re-rating. But IT pharma clearly defensives, and IT bottoming out. It's looking like a good time to start getting into IT. It should outperform over the next 1 year, 2 years.
Thumbs up on IT. Both Mr. Bagga and Mr. Palvia have the recommendations in IT. But Rajesh, do you have any more recommendations to share with our viewers for the week?
So first stock is Reliance Industry. The way Reliance Industry is moving up, we believe that here is a potential that this stock can continue for the more upside. The way stock managed to give breakout of the last 4 days minor dips. So I think here could be another rally. 3260 would be the next target for Reliance Industry. Your stop loss should be kept as a 3150. Second stock is from the pharma space, that is Aurobindo Pharma. Almost last 3-week decline reversed by the stock in this current week. Very strong bullish candle for the week on the Aurobindo Pharma stock. The way stock has shown long built up, we believe that here a rally can continue. Most of the pharma stocks are showing good buying interest. So the 1340 would be the next target for Aurobindo Pharma. 1265 should be your stop loss. And the third stock is from power, that is CESC. It's a mid-cap stock, but the way stock is now almost trading near to its all-time high trajectory, very strong buying action throughout the week. And the way stock has closed around 168 level, we believe that here is a potential to move further higher. 185, one can look for the target in the near-term perspective. Your stop loss should be placed at around 162.
All right, picks coming in: Reliance, Aurobindo Pharma and CESC from Rajesh. Rajesh and Mr. Bagga, thanks so much for joining us and taking the time and speaking to us at ET Now. But viewers, that's a wrap on the weekly edition of Your Trades. From Priyanka, me and the entire team that put this show together, thanks so much for watching.
If you like this video, then like, share and subscribe to ET Now.